running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. Hope everybody's having a great start to your day. I am solo today, BigBeat, traveling to Chicago here, but we're ready to go. Markets are caffeinated and everything looks like we are set to open to the downside, quite frankly. Markets Dow set to open up slightly, but the NASDAQ and the S&P both sliding to the downside and continuing to slide today. Fed shaved 25 basis points as expected, but Powell basically said, don't plan your December cut party yet. Meanwhile, Trump and Xi hugged it out, well, kind of. Rare earth pause, a tariff tweak, and soybean selfies. But today is all about earnings. 80% of the show will be based around the earnings and what's moving so far today. So, let's get into it. You got to start on the macro level here. And good morning, Ron. Glad to see everybody here this morning. Do us a favor, hit the like button, the follow button, share with your friends. Help us reach more traders here this morning. We really appreciate it. So Fed right now, cut now, maybe not later. That's what we're looking at so far. Powell's line of the day was a December cut is far from a foregone conclusion. Anybody that was watching the market as that, headline or that he said that saw us move down pretty quickly on that news. Think of it as taking the balance sheet foot off the brake while the rate hand hovers on the steering wheel. When we look here at the 10-year back above 4.1 this morning. So market reaction rates, you can see how they moved up and they really took off as he started speaking. And really when he, like I said, when he said, don't count on December yet, and said it twice and basically said, because one of the questions was, market participants are expecting a December cut. And he pretty much said, that is not what the case is. Awesome. Thank you for joining and trading with us there, Blake Banana Republic. We appreciate it. We appreciate it. Do us a favor, hit the like button, share button. I got to get my sip of coffee here as we get going. So I do think traders, what really spooked them was that talk that maybe the second cut is not coming. We did see dissents, right? You saw, the president's man, Marin, wanted 50 basis points cut, and Schmidt wanted no basis cut. So we see that actually, playing out. We do see the dissension coming in. Now we do have, and then we have the president meeting with Chinese President Xi. They have made a deal-ish, I guess we'll call it. Rare earth curbs deferred for a year. Fentanyl-linked tariffs are cut down to 100%. Soybeans are back on the menu in China, we hope. It's a framework, but not a forever deal. Underwhelming, but constructive would be my takeaway. What do you folks think? What did you guys think about the U.S.-China deal? You buying it, you selling it, or you think we just got to keep our eyes on it and see how it progresses over the coming weeks? And then my other question is, does Powell pushback change your December playbook? Or do you still see the cut coming? Let me know. Throw in either a December cut or pause into the chat. Let us know what you're seeing out there. Next, we have to get into, of course, big tech earnings on the bull, right? We've got Alphabet, Google. They had the cleanest quarter so far out of the Mag 7. Up about 7.6%. So far, they are the big winner. slated to open up at a new all-time high for them by a lot, 296. This makes them now a $3.3 trillion company. They had 102.3 billion in revenue, up 16%. Their cloud revenue was up 34% to 15.2 billion. And what I was looking for is their search and YouTube ad accelerated. So their ad revenue is accelerating. Happy to see that. Um, and then Google turned into a utility company for AI. Their CapEx hiked again to 91 to 93 billion for 25. So AI infra spend is the new build of the railroad. Google is definitely part of the picks and shovel of this. Lower term could be a little bit weight on them, but the backlog and support the story, so they definitely have it. Cloud backlog, AI overviews, and cannibalization. None of that is obvious yet. So great print for Google, and they are up about 7.57. You can see there's been some profit taken already since about 8 a.m. It hit a high, like I said, of just below 300, I believe, 299.85. So just below 300. And I do have a couple of headlines with their headlines. On the other side of that, Microsoft down about 2.75 this morning. Slated to open up about 526. You can see they closed the gap to the downside here. Got a little bit of to truly close the gap, we'd be looking at about 525 here, trading right now at 526.80. They had a good print, but again, they are spending. They had a beat on the top and the bottom. Azure and their beat, give you those numbers here. Their earnings came in at $4.13 a share, beating estimates by 12.49%. Their revenue in at 77.67, a slight 3% beat on top line revenue. If we break down those numbers a little more, the Azure was up 40% versus a 38% expectation. So strong, but not overwhelming. CapEx calories came in heavy, 34.9 billion in quarter one. So again, you got to play a fine line between spending on CapEx and overspending, I guess would be the way we do it. They did become a $4 trillion company again. Yesterday, we'll see if they can hold above that $4 trillion mark. The market psychology seems to be when a perfect report meets a perfect run, any heavier spend equals red. So again, while they, very similar to Google, had very good earnings, their percentage of growth or percentage of expenditure into CapEx growing at a bigger rate has them down about 2.72 versus Google's move up of 7.39. And if we go from the good, the bad to the ugly, Mr. Zuckerberg not too happy today. They had optical messes, and fundamentally, it's okay. Their revenue, again, they had a mixed bag here. Their revenue was a beat. Their top line came in at 51.24 billion, about 3.5% above expectations. But they were hit with a one-time non-cash $15.93 billion tax charge, which has their EPS going from an estimated 672 to $1.05. So a pretty big miss here on the EPS side, but again, that is a one-time write-off. Their quarter four revenue guidance is 56 to 59 billion, so right in line with where they expected. And their CapEx is going to be up for 26 based on their AI. The red flags again seem to be that 2026 CapEx estimate coming in higher than expected. and a little bit of legal and regulatory overhang. But on the positives, they had solid engagement, solid ad pricing, and overall, their business is looking healthy. So it has been a tale of three different stories across the Mag 7. We do have Amazon and Apple on deck today after market. So we'll see what they bring us as we are getting about 15 minutes from the open, as we said. Tick still negative about 300 or so. Advanced decline down a little more than 1,000, right around 1235 here, and coming to the lows of the morning. DXY, Mr. Flanagan's happy. The one thing that is moving up this morning nicely, up about a half a percentage point, is the dollar index, 99.66. So again, less cuts, stronger dollar, I guess, is what we're looking at here. And again, the SPY or the S&P slated to open up down about 47 basis points, a half of a percentage point. But off of the lows of the morning. And the same thing for the Qs, which is the NASDAQ slated to open up down about 60 basis points, but not near its, well, just above its lows of the day. Gold made a run back above 4,000 overnight, but it has retraced back to that level. And silver back at 48.26, but a nice 3-day run to the upside on silver. Copper actually getting hit a little bit here today. Surprisingly, on that tariff news, the tariff news with China should be a positive for the copper market. Does not seem to be that way so far. So we'll see if that turns around. And crypto still getting hit hard. Problem, no spot volume versus it's all perpetual futures. There was, again, 100 billion in Bitcoin perps traded yesterday and only about 9 billion in spot trading. So until spot trading starts to come back, we are still at risk there without any difference, without any doubt there. I did forget to mention during the Microsoft segment there, OpenAI investment did trim their earnings also this quarter. As you probably heard yesterday, Microsoft is an owner of about 24% or so of OpenAI. So we'll keep an eye on how that continues to move. And again, they are down about 3% on their AI spending. Next, we have to get a little bit into the pharma. We see again, it's what is nice is we are seeing winners and losers emerge, and they're trading in respect to that. So let's start with the good again. Eli Lilly, one of BigBeat's favorite companies there, up about 3.55% here this morning. It's still the GLP-1 locomotive driving the train. If we look at their earnings, you can see top line revenue came in at 17.6 billion, well above that $16 billion estimate, and their EPS a 23% beat, 7.02 versus 5.692. Fiscal year guidance, they did raise that also. Zepbound bringing in about 3.57 billion, Manjaro about 6.52 billion, and they're also pushing an obesity pill. I will not try to say the name of it. It's something like orforglipron. And Walmart pickup for Zepbound vials has been big for their business. So again, Eli Lilly nicely up about 3.48%, not anywhere near their 52-week highs at 935, but a nice rebound story you can see here since August for sure, when they were trading back down at 622. On the other side of that, to a bit, we have Merck. They are definitely not in the same circumstance. down about 2.44% here this morning. And you can see again another one that's trying to, well, they'd already closed that gap, so you can't really look at that. They have already closed the gap to the downside from earlier last week. They did have a beat in both earnings and EPS. Top line revenue in at $17.28 billion. And their EPS was almost a 10% win at $2.58. But the stock trading down about 2.44%. Keytruda has been the big driver there, and it seems that, it's a little bit too much of the driver for some folks in their estimate. Keytruda is 8.1 billion, 47% of sales. So that is weighing on Merck. They did narrow their fiscal year revenue outlook, so stock is soft on it. And again, you're going to need to see some movement when it comes to other drugs not named Keytruda to see this move up right at the 50-day MA here. So at a pretty decent spot where you could see a bounce there from it. So one I would definitely keep an eye on personally here as a bounce back opportunity. Bristol Myers staying in the farmer circle here is up about 1% here. Again, their revenue was a beat on both top line revenue and on their EPS. Top line revenue came in at $12.22 billion, and their EPS came in at $1.63 versus $1.50 estimate. So beat it by about 8% here so far. They did raise their revenue guidance moving forward. And the opposite story of Merck, they talked about the growth within their portfolio, about 17% of their business coming from their legacy portfolio of Reblozyl, Breyanzi, and Camzyos, and 13% from genetics. So, again, the comparison, Lilly is on the offensive, definitely out there trying and discovering new drugs. Merck and Bristol Myers are playing defense, and GP1s remain the sector's center of gravity without a doubt. About 10 minutes from the open here. So, next we have to talk a little bit about the media sector and some of the consumer discretionary companies that are out there. We had a pretty good mixed bag of different folks report here this morning. Do want to take a quick look. Tick is still down about 285 here. And we do see it's still sliding a little bit to the downside here. Q's down about 62 basis points. S&P doing a little bit better. The Dow is slated to open up slightly up here, so we'll see what we get at the cash open. But the mood has seemed to have dampened, and not even the president's positive statements after his meeting with Chinese President Xi seem to be moving the market at all this morning. Starting with Comcast here. Down about 10% between yesterday and today. That is with a revenue and EPS beat here. So they had top line revenue at 31.2 million, above estimates by about 1.5% here. We also have EPS coming in at 1.12 per share, a little bit above estimates. They did say that their broadband was doing better than feared, and that their EBITDA was up 13% with Epic Universe's first full quarter, helping out. The studio helped by tentpoles. Peacock's losses have narrowed, And the stock is trying to base here this morning, but so far hasn't stopped dropping to the downside. Um, most of the talk I've heard with Comcast today is more based about will they actually, are they part of a merger and acquisition as these Paramount things move, as Skydance and as these others sort of work? Do they end up as one of the M&A partners there? Moving on from there a little bit, we'll go a different location, QSR. Those of you that like fast foods, restaurant brands, international up about 4.82% here over this morning. Nice beat for them. These are the parent company of brands like Popeyes, Tim Horton, and others. They had a top line revenue beat of about 2.4 billion, and also had an EPS beat here also. So good to see that from them. The consumer there seems to be fairly resilient. Tim Hortons was up 4.2%, leading the way for them. Popeyes also. Popeyes was actually down a little bit, 2.4%. And international has been their driver. So as they expand across the globe, they're having a better performance than in the US, where their value chase is still competitive. So as we've seen the move by McDonald's and other brands to cut price, to go back to these value menus, restaurant brands trying to stay out of the fray or seeing their US business get hit a little bit because of that. Sticking within fast food or quick service food, Chipotle down about 20% this morning. Wow. 31.73. BigBeat and I both called this one, and we've talked about it. Didn't seem like anybody was going back into Chipotle anymore, has lost their luster. You saw a lot of complaints about the size of their portions, right? And the value you get. They cut their same store outlook again. That's the third quarter in a row that they've done that. They're seeing traffic softness, especially in that key 25 to 35-year-old demographic. And here macro pressure is at a premium. When the wallet diets, the burrito shrinks. So, you take the last two segments together, not too surprising, right? That we see here in the US, where the GP1 drugs are just exploding. Stress on these restaurant brands, and overseas, where we don't see it as much, restaurant brands, the company doing a little bit better, and Chipotle really getting hurt in the US here in that 25 to 35-year-old segment. Some other ones rare earths are bouncing back today. Some of the bigger gainers we've been looking at so far this morning are in the rare earths, again, based upon the president and President Trump and President Xi's meeting and the reduction in sort of the escalation there, as USAR up about 5%. I will say, though, people are selling into this rip. Albemarle, another lithium miner, up about 1.63. But again, you can see here, since about 5 a.m., a little bit of a sell-off across that. Same thing, the metal company, TMC, up about 1.74, but down towards the lows of the pre-market trading. So keep an eye on that. Some other companies we've seen really move to the upside. Guardian Health up 23% off their strong earnings. They had a 12% beat on the top line. Top line revenue came in at $265 million there. They are still a negative earnings company, so you do have to keep that in mind. But they did earlier today set an all-time high at 73.31. And now slated to open up today at 89.83. So strong move to the upside, as you can see here on Guardian Health. This reaction, if I had to look at it, is one where I think Big Beat would probably be looking to fade this one. So the way the volume is showing there and the way it's stalled out at this level would not surprise me if that's one he's looking at here. Other pre-morning raisers on earnings, FORM, which is form factor. They had a 32% beat on their EPS. That has them moving. Again, this is an advanced packaging company. So it is definitely helping there. They do a lot of semiconductor testing and other things within that tech sector. But form factor, a nice move to the upside here. Viavi Solutions, another pre-market gainer here, up about 11.37% on their earnings. They beat their EPS by 13.8% and had top-line revenue of $299 million. So nice little beat for them. An information technology company. We also saw C.H. Robinson is up 16.71% on their earnings. So, like we said, there is a wide swath of companies that are up nicely on their earnings. On the other side of that, there are definite misses on earnings also. Sprout Farmers Market down about 22% after their earnings here today. Part of that is that they had a revenue miss while their EPS was a beat. SFM down about 22.65 here today. We talked about Chipotle already. eBay, another company here, down about 14.61% on their earnings miss today. So eBay down about 15% here. And we are open. Let's see what we get here on the open. First move by the Qs to the downside. SPY to the downside also. Dow Jones opens up down 45 basis points. So again, that was up in the early market trading, but moving now to the downside. Tick remains negative. Advanced decline down around 3,300 to the negative here. So people definitely not so much buying the China-U.S. Deal. They seem to be more focused on Powell and the Fed comments that don't look for that necessarily for that December cut to come in. Tick is still negative 249 here. Qs are slid pretty quickly to the downside, down about 75 basis points here. SPY down 60 basis points, still moving to the downside. Meta, we're down 11.32% here, still moving to the downside there. Take a quick look here across my stuff, what's going on. Pretty big hit across most of these here. Most of the tech names down. Google up 4.61%, but you can see that's moving way down from its early morning. So, not seeing Apple is the only thing. Apple moving to the upside here, scheduled to report earnings after market close today. Apple nicely moving to the upside so far. And market in a definite sell-off here. Bitcoin at 108,452, so sort of balancing out, but definitely not in any kind of solid movement here. Would not surprise me to see a drop down to the 106 level today. Chip stocks, ASML, Texas Instruments, Qualcomm, and AMAT in the green. NVIDIA down about 1%, broadband down about 1.27%, TSM down about 60 basis points here, AMD down 1.1%. Do see oil moving up this morning. Oil is moving up. That's about it. DXY was moving up also. Let's see if it's continuing. Actually, seeing a little bit of a sell off here since about 9:10 on the dollar. Still sliding to the downside here. The rut down about 60 basis points. VIX, it's 1685. So it is at highs of the day, but down versus yesterday's highs, about 35 basis points. Again, gold and silver both moving to the upside. Bank of America up slightly here. Berkshire Hathaway up slightly. Costco back down around 913. Man, this is where I start to think that Costco becomes a buy in this level towards 910 for sure. So Costco definitely on my radar here. Carvana down 12.12% here after their earnings. They missed their EPS. They did have a revenue beat of 10.5%, 5.65 billion in top line revenue, but downside here on their EPS has them down about 12.41%. Looked like they wanted to bounce back, but now sliding again. Biggest laggard on the day is that Sprouts Farmers down 26.79. I also see here Impinj on their earnings here. Impinj P PL down after EPS and an earning top line revenue beat, but they are down 19% here. Chipotle still sliding down 18.75 here. eBay down 14.4. Wingstop on their week earnings down about 14.13% so far. Meta now down 12.3% here. See if anything else comes across here. Not really. Disney holding steady. Google still up 3.81, but that's at lows of the cash market here now, 3.7. So we do see the sell-off here pretty much across everything. Advanced decline now at minus 28.78, so bouncing back from the lows of the day, but the tick continues to go negative. NASDAQ down about 94 basis points here. SPY down 70. Dow Jones bouncing back a little bit here towards the high of the cash open, only down 17 basis points. Mag 7, NVIDIA looks like it might fall back down towards that 200 level here, so we'll keep an eye on that. Apple is up but down off the highs of the day, so again, not much moving to the upside so far. All of the Mag 7 so far. Amazon and Apple are holding their own. Everything else moving the downside. Netflix down another 0.5% here. Tesla down 2% here this morning. If we look across, financials are having a decent day. If we look at the sectors of the S&P, energy getting hit by about 52 basis points here. Utilities are up about 35 basis points so far. Technology down 1 percentage point. Materials down about 1 percentage point on that China-U.S. Tariff. I don't know what you'd call it. Pause. There we go. Consumer staples up about 21 basis points. Consumer discretionary, the main loser, down about 1.35. We know a lot of that with those restaurant names. The industrial sector holding steady here. Communications also down pretty big here. And again, Comcast is weighing heavily on that. And we do see green out of healthcare, the financial sector, and real estate so far this morning. European stocks are down here this morning. Also, their stocks is down about 54 basis points. We do see Japan continue to hit all-time highs, like Big Beats talked about, up another 72 basis points here. So the Nikkei, a big winner. UNG up about 2.29% here today. So natural gas, as Steve's been talking about too, we are expecting to see a little bit of a colder winter here. So we'll keep our eyes on it. Bitcoin now below 108. Like I said, definitely under pressure here. Definitely under more pressure. Okay. Q's down now 1.18. Like I said, I think we are going to see a rough day in front of us, at least for the time being here. Uh, Nvidia now down 2.26%. Tick still down, in the negative. We're trying to see a bounce back. It's going to be big here. Next 10 minutes will sort of give us a direction on the day. If we can't start to kick back, then when the algos sort of kick off, look for more sell off. As I look across crypto, across Twitter, not really seeing much. Just people talking about how much down everything is. Huh. So yeah, not a bunch going on here. Definitely sliding to the downside. Gold unable to get back above 4,000 yet. It just faded away when on its first attempt here this morning. The cash opened to hit it. So we're not seeing much of an appetite, even risk on or risk off, however you consider gold as a trade. And we're seeing weakness continue across them here. 628.11 on the Qs and still sliding to lows of the day. Same thing. SPY is sort of bottoming out, but we are still sliding to the lows. Anybody have any faith we bounce back here today? Usually it takes, Steve calls it the day and a half rule, that you really won't get the true direction from the Fed on announcement till Friday, as people take last night and today to really digest that news, and then they really get a better feel for it then. I think they've made their decisions as soon as Powell said, don't count on your December Tea Party. So that's what I'm looking at so far. Qs are starting, SPY starting to hold up. Can the Qs hold up here? Are the algos done? Usually about 10 more minutes of heavy algo trading before that happens. Google starting to balance out here. Is anybody buying? Meta's starting to be a buy the dip opportunity here. I do think you could go long on Meta here on a scalp. Looks real good on it. There it goes to the upside. Got a bullish divergence there. I do like buying the dip here on Meta for a scalp. We'll say Crocs was up significantly in the pre-market, really has pulled back here. So I don't know. Their earnings, they had their earnings and they were strong. They beat EPS by 24%. Steve's most hated company, Crocs, located here by me in Dayton, Ohio. They did have earnings and revenue beat, had them moving up and now down 1.58%. Same thing. Legence was up nicely in the pre-market, down now. Same thing. USAR, and we talked about it. The material sector was up on the news of the president, Trump and President X's meeting, but now you can see it's down 2.79. Same thing with the metals company, TMC. So we do see a lot of profit taking. Same thing, Cheesecake Factory on strong earnings from them overnight. They reported after hours yesterday and had about a 12% beat on their EPS, and strong revenue guidance was up nicely in the pre-market, now down 77 basis points. Same thing, the Cigna Group here getting hit on their earnings pretty hard, now down at 9.25%. They were up in the pre-market, and they did have a beat both on revenue and top line earnings here. So if I had to guess, their guidance is going to be what hurt them. Don't see any highlights on it, so we'll see. Okay, we are coming until 9:45 when I go solo. That's about as long as I can talk without taking a break here. So markets do look like they are. You could maybe start to dibble in and buy the dip on some of these beaten up ones. For me, Meta would be the one that I would look at here probably today for a move back to the upside. Same thing, Microsoft too. I would actually be a buyer in Microsoft here. Both had good earnings. It's just how much money they're spending. And I do trust Microsoft's spend and their subscription services more than I trust Meta's. So for me, buy the dip on Microsoft here would be a bad opportunity. We got Amazon and Apple on deck today, everybody, after hours. So make sure you're keeping an eye there. And we will be back tomorrow morning, first thing, to bring you everything going on across the markets. Have a fantastic day, everyone.